Heroes are an inspiring group of people, every one of them, from the larger-than-life comic book heroes you see on the big silver screen to the everyday heroes that let us live the privileged lives we do. Every hero has a story to tell. The doctor saving lives at your local hospital, the war veteran down the street who risked his lives for our freedom, the police officers and firefighters who risk their safety to ensure ours. Every hero is special and every story worth telling, but there is one class of heroes that I think is often ignored. The entrepreneur, the creator, the producer, the ones who look at the problems in this world and think to themselves, you know what? I can fix that. I can help people, and I can make a difference. Then they go out and do exactly that by creating a new product or introducing a new service. Some go on to change the world, others make a world of difference to their customers. Welcome to The Hero Show. Join us as we pull back the masks of the world's finest heropreneurs and learn the secrets to their powers, their success, and their influence, so you can use those secrets to attract more sales, make more money, and experience more freedom in your business. I'm your host, Richard Matthews, and we are on in 3, 2, 1. Hello and welcome back to The Hero Show. I'm Richard Matthews, and I've got on the line with me Lane Kawaoka. I'm going to butcher this. Kawaoka. Is that how you say it?
Kawaoka. Close enough. Good try.
Kawaoka.
Get it. Don't worry about it.
So what I want to do real quick is introduce you so everyone knows who you are. So let's see here. Lane is a licensed professional with a master's degree in civil engineering and emphasis in construction management and a bachelor's in industrial engineering from University of Washington. As an engineer, you managed over $230 million of capital construction projects in the public space, city, state, and federal, and the private sector. And aside from your day job, you control 7 manufactured home parks, 15 apartment buildings, and 1 assisted living facility, totaling 2,600 units in 11 different markets here in the US, which is crazy cool. Passion project is simplepassivecashflow.com, top 50 investing podcast. So what I want to do real quick is just start talking about what you're known for. What is it that people, what is it that your business is known for? And then what is it that Lane Kawaoka are known for?
Yeah. So today, I own about 2,800 units or so. Target Class B and C recession-proof assets, and like I said, like workforce housing apartments and mobile home parks and a little bit of assisted living. And what we do is we do minor roof improvements to the property to bump the rents up a little bit, so that we can increase the force appreciation, increase the value. So that's what I'm doing operationally.
Yeah, increase the cap rates and whatnot.
Right.
And then what is it that you do with the smart passive cash flow?
Yeah, so simplepassivecashflow.com is my URL, and it's also the name of my podcast. And there, it started like 4 years ago, 2016. I've been investing for quite a while, but 2016, 15, a lot of my friends were asking me, well, how do I buy all these rental properties across the country and I don't even step foot in it? And they're asking me how I was doing it. And it's real estate, or it's like anything, any business, right? Nobody ever does anything. They just want to hear you talk about it. So I just decided to record it in a podcast form, so I wouldn't have to keep repeating myself to people who wouldn't follow through with it. So that went through for like a year, and then finally in 2017, people like started to give me a lot of like positive feedback through doing it, and that was kind of been my passion project going forward. Is a lot of people say it helps them out, points them in the right direction, gives them a lot of practical advice. That's sort of my give back, the freebies out in the world.
Awesome. Do you offer like coaching or training in the real estate space, or is it just the podcast?
Yeah, I mean, I started doing that just in the beginning, but it's kind of trading time for dollars. But now what I do is I have like a group coaching and passive investor accelerator. So it's a little bit more cost effective for people, because I don't think people should pay more than 10, 20 grand for a mentor. That's ridiculous, especially when a lot of these turnkey rentals, to get started, you maybe need like $20,000-$30,000 to get going. 10, 20 grand, that's like a down payment. You should put it to a property instead of paying some dude. So that's kind of what I do these days. But mostly the people in there are accredited investors, so that's really nothing to them. If your net worth is under 200 grand, I mean, you should stick to all the free stuff, in my opinion.
That makes sense. So What I want to talk about is your origin story, right? Every hero has their origin story. It's where you started to realize that you were different, that, maybe you had superpowers and you could use them to help other people. How do you start to develop or discover like that you were an entrepreneur and how did you sort of make this transition from being a civil engineer to being a real estate investor and getting into business?
Yeah, I think like a lot of like, high paid working professionals out there, we all started with this blueprint of study hard in school, to go to college, study hard in college, to go get a good job. And I call this the linear path. I followed the linear path for much of my life, and graduated with industrial engineering from University of Washington. Went to work, and construction civil engineers, they just stick us out in the field. It's not the best job in the world. Actually, it kind of sucks a little bit, but
Yeah.
and again, following all that financial dogma of like even buying your own home to live in, which I don't quite believe is the right path for most people out there. But
Hmm.
I did it anyway because I'm brainwashed like anybody else. So I bought that house to live in. I think one of my things that helped me was I was really cheap when I started out, so I was able to save most of my paycheck. So I bought a home to live in Seattle, and because I was traveling so much for work and had no life, um, I just realized that, and I was never home. I just realized, hey, maybe I should just rent this thing out and just live in the company hotel. As I traveled around the country on jobs. So that's what I did, and that property was $350,000. I just went in with 20% down payment, and the mortgage was 1,600, and the rents were 2,200. So there was a little bit of a delta between there, and I thought, wow, I got to keep doing this again and again and again. This is my ticket out of the rat race.
So how long did it take you to go from your first rental property to like saying buying your next property to like really scaling to the point where you have 2,600 units?
Yeah, so I mean, the second property, I was able to save maybe like $30,000 a year. So the next property took me a couple of years to save up for. Um, and then things got a little bit quicker because then I caught on to this fact that I shouldn't invest in primary markets such as where I was living, Seattle, California, New York, places where the rent to value ratios don't make sense. And if you're new to real estate investing, we look at this rent to value ratio where you take the monthly rent divided by the purchase price. And what we're looking for is something 1% or higher. So, like that first property I bought was it rented for 2,200 a month, and you divide it by the purchase price of 350,000. That's much under 1%. I didn't know that
Yeah.
at the time. So then I switched to buying properties out in the Midwest, Birmingham, Atlanta, Indianapolis, where I could pick up very high quality class B minus properties for $100,000 that rented for $1,000 or more. So that was kind of my protocol for the next 11 properties.
And so you did the single family homes to start with for your first 11 properties. When did you make the transition into buying multifamily?
Yeah, so that probably came around in 2015. Got up to that many properties. I thought that I was going to get like 30 rental properties and that was going to be my financial freedom. But, if you do the math, if you're cash flowing a few $100s per property, 10 properties is just 30 or $3,000 a month. That's nothing for a lot of people.
Hmm.
Um, it's awesome, don't get me wrong, right? I mean, it's sort of passive, but as you start to layer on more properties, now, even though you have a property manager to manage the day to day and all the garbage that happens, um, I mean, I was getting like an eviction or two every year, some kind of a catastrophe happening every quarter, which was fine,
Yeah.
right? The property manager is doing that, but if I needed 30 properties to hit $10,000 a month of cash flow, then you multiply all those numbers by three. And that was what I
Yeah.
realized it just wasn't scalable. So in 2016, I committed to into an asset class that was a little more scalable at that time.
Did you pick mobile home parks specifically over something like apartment complexes or other multi-unit things like self-storage? Was there a reason why you went that direction?
Well, I mean, I think I racked up maybe like 2,000 apartment buildings first. And then, the mobile home park thing is more of a later thing. I mean, apartments is just very the logical progression. So many investors who have done single family homes from 2010 to 2015, it's not the hardest thing in the world. And they're progressing up to larger assets, and a lot of them are coming into the apartment space. I mean, quite frankly, a lot of the dumb money is coming to apartments these days. So as a contrarian investor, I always trying to move ahead of the pack. So that's why I'm moving more into mobile home parks these days, because it it's not for the faint of heart, right? There's like sort of a knee-jerk reaction if you've never lived in a mobile home park, and I've never lived in a mobile home park. But once you visit them, um, I would say they're a lot better community than a lot of the Class C apartments that I own. So that's more of a later stage thing, these mobile home parks.
My curiosity is when it comes to running a real estate business like this, real estate investing career, um, what would you say your superpower in your business is, right? What is it that you bring to the table that really helps, solve the problems for the people that you are, because in your case, your clients for the people who live in your properties, right? So what is it that you do that really helps solve the problem for them and helps you grow your business?
I mean, on the operation side, I'm just smart enough to know that I'm not the one who wants to do it. I just don't have the patience, and then, quite frankly, I don't want to be the person collecting rent checks and playing enforcer.
Mhm.
So that's why we hire the best professionals to do it as employees. Um, as far as like the podcasting side, I mean, I think people think I'm pretty authentic. Like I tell people how it is, and like my investors, that's what they want to hear, right? They don't want me to sugarcoat it. Um, I mean, like I actually just wrote this article for a magazine recently, and I know I think you'll like this because you're a comic book guy too. But like, I mean, look at like Thor, right? Like, look at his character art in the
Mhm.
Avengers. Like the first couple movies, people didn't really like him, right? I mean, other than the fact that he's like ripped, right? But there wasn't much
Yeah.
there. It wasn't until like Thor 3 and then especially Fat Thor came along that people it really resonated with people, right?
Mhm.
So I'm in a way I'm kind of like that. Like I don't know, just like my personality, I think people really resonate to it and it's real.
So you're like Fat Thor, right? You
Yeah,
aggressively
kind of.
lazy, right? You're like I want to have my business, but I want it to run sort of like on its own, where I'm just providing the like the strategy and what is going on, but you have people that are making everything happen.
Right, right. And people want to like work with people that are real, right? As opposed to their traditional real estate firm who's um, they're in white shirt, brown pants, blue or yeah, blue pants, brown shoes, that protocol, and they're kind of talking from a script. You don't know who they are people
Yeah.
wise. And that's when I invest with people, I want to know who they are personally.
Do you still have your day job, so to speak, as a civil engineer, or are you all in on the investing now?
Yeah, so I quit last April because it was just getting to be a little bit too much. I mean, 100K job was easy money, but just the people around, right? Being in the ML very draining to be around that mindset and to be quite frankly covering it up, right?
Yeah.
Like how Clark Kent has to cover his identity and hey Clark, you want to arm wrestle? You're, it's just and people are telling me how to manage my finances, and I'm like, are you kidding me, man? Like,
I like that. I like that picture. It's like asking Clark Kent to arm wrestle.
right? And he can't show his true identity. I think one time somebody heard I owned like three rentals in or five rentals in Birmingham, and they're like, "Hey, man,
Mhm.
you can't say that. People are gonna think you're not focused at your job." I'm like, "All right, well, thankfully you guys don't know about the other like 2,800 in the other states."
That's funny. I had an experience like that a couple weeks ago. I was in San Francisco. We travel full time with my family, and I had a gentleman come up to me just like on the street and was just chatting and whatnot, and he started trying to give me like advice on like how I should run my life and my business. Um, and And I was like, you don't, I was like, you don't have any idea like what the results I have are. Why are you trying to tell me how I should run my life? Um, yeah,
Right, right. I
yeah,
mean, I like I tell all my investors, it's like don't take advice from people who are not financially free. And sometimes
yeah,
that might even include your CPA and your lawyer, right? That's why they're still working at JOB. They haven't figured it out.
yeah. That's really awesome. I like the whole like hidden Superman kind of thing. But you're so you quit last year. Now you're full on in the investing career. Are you still looking at growing your portfolio, or are you like happy where you're at? What's your plan with your real estate business from this point?
I mean, as long as the deal cash flows, right? Like I don't do any development deals and like that kind of stuff. Like I think you're more traditional real estate. I mean, I'm very not house flipper-ish. I'm more
Hmm.
buy an asset that is performing today that has room upside, like maybe we can bump the rents up $50 in every unit without doing anything, just by putting right back on the market. But then there needs to be a component of forced appreciation that we can also work on to bump in an additional 50 or $100 more. As long as it fits those criteria, I'm in. I think I see a lot of like newer investors. They're like, oh, it's not a good time in the market. But if you know what you're doing and you can underwrite the deals the right way you can do your sensitivity analysis. I mean, I think you keep investing in deals as long as, deals are coming by. But that's the thing. You just got to be more selective.
Are you looking at like increasing the cap rate on the property and then like doing a cash out refi to pull your initial investments out so you can go and put that into something else with the loan proceeds, or are you just buying the property flat and keeping it for cash flow? Like what's sort of your strategy with these?
Yeah. So we like to call it like a slow flip. So we'll usually like to hold on to the property for 5 years. The first couple of years, we'll be rehabbing all the units. And you just do that naturally as tenants move out. Right. So you
Hmm.
don't, you keep your cash flow high and you stay in the green. And then as they move out, then you rehab the units as they come up available. And slowly but surely, you'll probably go through all the units in the first couple of years, and then another couple of years to stabilize the books and increase the community at that point. Once you've got the rent increases, and then hopefully you can transcend to the next asset class level, like take a property from a C, maybe a C plus, B minus, and get a higher cap rate sale for a multiplier. So
Yeah.
all this
And
time,
so
you
then you're
increase.
pulling out of that one and buying something else.
Right, right. And part of that is like, people are like, well, why don't you just hold on to the property forever? And I'm like, well, a lot of properties we buy are like 1970s, 1980s property. At some point, it's just the old property, right? Your huge capex is going to catch up with you, and it's just an older property.
Yeah.
So what we try and do is we try and put nice lipstick on a pig, bump the value, and let's get out and let's move on to the next one, because our highest and best use is increasing the NOI, which is increasing the cap rate.
Yeah, and one of the things that a commercial investor friend of mine has told me, which because I asked him the same question, I was like, "Why don't you hold on to them for cash flow? Because cash flow is like what everyone wants." And he was like, "Because essentially, because money loves speed, right? And if I can pull out of this property now and pull $1 million cash out of it, the cash flow of that property would take me 3 or 4 or 5 years to hit $1 million." Right. And if I could take the $1 million out now and put it into the next asset class, right? The next, either a better property or increase cash flow, then I can grow my portfolio a lot faster that way.
Right, right. And it's based on the person, right? Like if you're Tom Brady and you're already married to that supermodel, like why would you want to, you're like, well, why don't you stay in the property? Why don't you just do nothing? But he continues to go after Super Bowl rings, right? It's
Yeah,
his highest and best use is doing something else.
absolutely. So what I'm going to talk about is your fatal flaw, right? So Superman has his kryptonite. Batman's not actually a superhero. When it comes to like growing your business, has there been something that has either held you back or something that you struggled with as an entrepreneur or as an investor that you've had to work on? And what was it, and how have you sort of worked on that and helped overcome that?
Yeah, I think my kryptonite is like I still do a lot of the computer stuff by myself. I mean, that's probably why I made the starting a podcast was not daunting to me at all. Like I still edit all my podcasts, and I remember when I was like 15, 16 years old for like band, you do these tape tests. I would like get the software and edit my tape test together.
Yeah.
So making podcasts is like nothing, right? But it still takes up a lot of my time right now, and I probably shouldn't do that because that's kind of $10 work and below. But that's probably my fatal flaws. Like I keep working in my business.
So I highly suggest hiring some people.
I hear you, man. I hear you.
I
I think I think one of
uh
my problems too is like for certain things I just don't trust people. Like, like I don't want to give the login to YouTube or like the podcast uploader. Like I just think somebody can really screw it up. So I hold
yeah.
on to those, but yeah, I need to give up whatever else I can for sure.
Yeah. So like one of the things that was cause I had the same problem. Um and there's things that you can do to get around that. So like like LastPass, for instance, you can share logins with people and they don't actually see the passwords. And then there's like YouTube, for instance, has the ability to give someone restricted permissions. You can make them a manager instead of an admin. And you can start giving away a lot of those things. What you find, at least what I found in my business, is the more I gave away, the less I realized I didn't have to worry about a lot of it. Um, and it's really
Cool.
helped grow my business.
Yeah,
So
I got that
hopefully,
last thing here too, and I didn't know you could add an admin. I'm gonna write that down and have a
yeah.
talk.
So
Yeah.
if you're on your YouTube channel, if you have a personal YouTube channel, um, then you can't add managers, but if you can transition it to a business YouTube account, and it doesn't cost anything. You just go in there and tell them I want to make it a business account, and then you get the ability to have managers. So you
Oh,
can go to permissions and you can say I want to have managers, and you can give them like restricted permissions. So then you own it, and you're not giving up your admin or your owner rights. You just have this person's allowed to upload videos but not delete them, that kind of things, or whatever.
okay. Well, if
Yeah.
you're doing it, can't be that bad, huh?
It can't be that bad, especially if you find good people.
Yeah,
Um, so, so
yeah.
yeah,
I,
it's really a
I try to pay them on time,
yeah, pay them on time. That's one of the things that like was for my business was like learning how to like, oh man, once you have people, then you have to like manage payroll and that kind of stuff. But it also helps grow your business
Right.
and takes you out of doing some of those things. And I know I said I don't run real estate, but I know there's like like really growing the real estate business. You get into like how can I have someone who's doing the acquisitions and someone who's doing managing the property managers and stuff like that, so it's not coming to you.
Mhm.
And you start really scaling that way.
Exactly. No, thanks for that.
Yeah, absolutely. So, what I want to talk about next is sort of like is your driving force. What is it that Spider-Man fights to save New York, Batman fights to save Gotham, or Google fights to categorize all the world's information? What is it that you are really striving for with your investing career?
Yeah, I mean, I think like the one thing that really pisses me off in this world is that there's a lot of other working professionals who like busted their butts in college and at their jobs, and they're still having to live lives where they go to their day job that they may not like, and they're gonna have to work at it for 40, 50 years.
Yeah,
And I think that stems from a lot of bad financial advice out there, which starts with like, just investing in mutual funds and stock market stuff. And I think that, I mean, I've kind of proven it. As long as you invest
yeah,
in like things that have cash flow or leverageable and hard real assets instead of these fake paper assets, I mean, you can retire in 5 to 10 years, no problem. So I mean, it's
so really
that.
helping people who are in your shoes know that they can actually retire, do something different by changing what they're doing with their discretionary income.
Right, right. And also, there's a lot of websites out there that are these like penny pitcher guys, save all your money, don't drink a Starbucks latte, which I think is like, don't go into debt. I'm like, go into prudent debt where you're getting cash flow, right? So it pays for
Yeah,
itself.
smart debt, to your little background you got up there, smart
Right.
debt that actually pays for itself.
Exactly. Exactly. So it's just very counterintuitive. People who read Rich Dad Poor Dad get it, but then there's none of that. You read that book and you're like very motivated, but then you're like, all
What do
right,
I
so what do I
do?
do? Yeah, exactly.
Yeah,
Well, if you're a high paid professional and you've done the work to get that good salary, you're able to save your money and not just have it go through a hole through your pocket, well then do it like how I have, buy a single family home, get started, and then go into bigger deals as you progress. It's very simple.
Yeah. Do you put up all of your own capital for your properties, or do you use investor capital or do anything like that nowadays?
Yeah, so what we do is when we bring in partners on larger deals. So when I put in my capital, it goes on the same investor class as other investors. So it's we call this private equity or syndications. So think of it like the general partners, or I'm in the cockpit with the other partners. We're managing the deal, we're finding the deal, we're lining up the lenders, and then all these limited partners come in the coach, invest money, and they go to sleep and they go about their lives, and hopefully collect your checks. Um,
Yeah.
and the idea is, as a high net worth accredited investor, you're going into dozens and dozens of these projects, curating your portfolio, and you're diversified over a lot of different deals, a lot of different partners, areas, asset classes, and you never should have anywhere more than like 5-10% of your net worth into any one particular deal.
So one of the things that's always fascinated me is that in the real estate space, you have the business side and you have the investing side, right? So the business side is like what you're doing, where you're actually buying the properties and managing them and helping grow them and doing the operations, and like you're in the business of real estate. And then you have the investors who come in and they put the money up for real estate, right? The ones who, they go on their daily lives, are high net worth individuals, and they put the money in and they get some sort of a return on that. I'm curious if you ever think you're going to make that transition or work in both ways, where you have the real estate that you're running the business side for, and then maybe you're just taking some of that cash flow that you have or the net worth that you create from the real estate and investing in other projects that you're not doing the business on, where you're just being I'm going to put up my $100,000, $200,000, or $1 million into this project and make a return on it. Do you think you'll ever make that transition?
I mean, right now I'm kind of doing that, right, with my own projects. I guess like you kind of said, but it's like I underwrite the deals myself. I know the people, right? Like half of this is the numbers, half of it is the people. If I know who I'm working with and I'm in the general partnership, then why wouldn't I? It's more information, more insight for me as an investor to do that. Have I done that? Yeah, probably a couple of times where I'm not in the general partnership and I like the deal, I like the people, and I just jump
Just
in.
put up the cash.
But I don't know. I mean, me personally, if I'm an insider, so I want to be on the inside, you know?
That makes sense.
Right? I mean, but
Yeah.
probably, in the future, when I'm worth millions, I'll probably do what these other guys are doing, and they just put in 50 grand as a test investment, and if the operator performs, now I open up the floodgates, and here I come.
Yeah.
But I don't know. I
I
mean, I,
was
I
I was
think I'll
just
always
blown.
be in the game, right? Like I'll always be in the circles, I'll always be at the bar talking to the people actually doing the deals, and that's what's nice about this. You actually know who you're working with personally.
That's one of the things that really fascinated me about the investing side. I was talking to another gentleman who does apartment investing, and he was like, just for numbers' sake, they'd buy $1 million property, and the lenders are only going to lend 80% LTV or whatever, loan to value. So they have $200,000 they need to bring in. So they would have the investors, an investor put in the $200,000, and they give them like a 10% equity stake, and they would take the property to its highest and best use. Now it's worth $2 million, and they pull out they do a cash out refi, and the investor who put out his $200,000, he was making 10% of the rent every month, and he got his $200,000 back in 18 months, and then he has a 10% equity stake, so he gets 10% of the $1 million that came back, and like he put up $200,000 and made like $500,000 over 5 years. It's like, and he didn't have to do anything. And I was like, that's always fascinating to me, that there's also that side of the investing. When you get to a certain level of net worth, you can just put money up, let an operator like yourself come in and actually really make their money work for them. It's such a fascinating world in real estate, that you can actually really get your money to produce more than the effort you're putting in.
Right, right. And like I'm not really a fan of real estate in particular. I mean, one of the big reasons I like it is just the tax benefits, right? Like when I
Yeah.
was saying my single family homes, I think a lot of people who own rentals know this. Like you're able to take uh, a straight line depreciation of 27 years. So on that, um, you just divide the price of the property divided by, or the value of the building divided by 27 years. But on these larger deals, they're large enough so that we can do a cost segregation. So we get an engineer to itemize every single component of the building. Who makes this big stack of accounting stuff. They give it to the accountant, and now the accountant's able to write off a huge proportion of the building in year one. We call this bonus
Wow.
depreciation. And if an investor puts in like 100 grand as a passive investment, I'm seeing anywhere from like 60 to $90,000 coming back in year one bonus depreciation to offset their income. And if you're a real estate professional, now that's the key. Now you can use that to offset your W-2 income. So if you're a high paid doctor making 500,000, just go into a few of these deals, and now the whole game become knocking your AGI from 500 down to 350 or whatever that highest
Mhm.
tax
Yeah,
bracket,
the adjusted gross income.
right?
So people are it's dropping down how much they're actually um,
Right, right.
being taxed on,
I mean, the
which
reason
could be a
why,
huge savings.
yeah, I mean, the reason why I love house flippers because they pay all our taxes for us. Everything that they make is ordinary income.
Hmm.
Everything we do is pretty much tax free, you know?
Yeah, and then you can, even when you, one of the things that really fascinated me was like loan proceeds are not taxable.
Right, just like
So,
a cash out refi, right?
yeah, when you do a cash out refi, it's not taxed. So when you take a property and you double its net operating income, and you go from, it's worth $1 million to $2 million, that $1 million spread that you pull out on a cash out refi is tax free. Like that's insane to me.
Right. And then
Um,
you pull that money out and you go into five other deals. You
and
get
you do it
the
again.
Yeah, and you get the bonus depreciation from that. And luckily those passive losses you can carry forward that indefinitely. You don't have to use it that
Hmm.
year.
Yeah, I have a friend of mine who invests in commercial real estate. He calls it HNB money, which is Hip National Bank. It goes right into your pocket.
Yeah.
The Hero Show will be right back. Are you tired of trying to write webinars that don't consistently convert? How would you like to have a webinar that effortlessly created sales in your online business? You can. Introducing the Webinar Alchemy Workshop. Webinar Alchemy Workshop is an online masterclass that will help you write incredibly persuasive webinars for your online courses quickly and easily. Using what you learn in this class, you can build a webinar that educates your entire audience while still creating sales. For a limited time, you can purchase this masterclass for only $7, and you'll get the exact framework I've personally used to help my clients sell more than $1 million worth of online coaching and training just over the last year. Simply text the word alchemy, ALCHEMY, to 444999, and I'll send you all the details.
The music is by Purple Planet Music. Visit www.purple-planet.com.
And now, back to the show.
Cool. So I'm going to talk a little bit about some of your own personal heroes, right? Frodo had Gandalf, Luke had Obi-Wan, Robert Kiyosaki, we mentioned, had his rich dad. Who are some of your heroes? Were they real life mentors, speakers, or authors, peers that are just figures ahead of you? And how important were they to what you've accomplished in your business so far?
Yeah, I mean, I think like my investing really took off not too long ago. When I had 11 rentals, I took that next step because I started to, pay money to join these masterminds, and you get around other people, and I tried to find other doctors, lawyers, engineers, other high paid professionals to see what they were doing. And it's not one in particular, but just the myriad of different topics that they discuss and how they really engineer their lifestyle around, some of them like their jobs and, they might go down to 2, 3 days a week of working. Some of them don't,
Mhm.
right? And they quit and they become a real estate professional so they can harvest all those tax losses and offset every single one of their income, including their spouses. But it's this whole like world of just the world is your oyster and you can create your own, and just getting a whole bunch of different data points and different philosophies from a myriad of people. Um, in
So would
terms
you
of,
say when you made that transition to like getting yourself around a bunch of people who were doing this, did that really explode your business?
yeah, I mean, from 2015 15, 16 to now, I mean, going from 11 units to 2,800 now. I mean, it just numbers don't lie, right?
Yeah,
And I quit my job
that's an
too.
insane growth. 2,800 units. So just out of curiosity, how much of your personal time is put into managing a 2,800 unit portfolio?
I don't know. I'm trying to keep it under like 60 hours. I was,
60 hours.
I mean, I'm
Like per
definitely,
week?
yeah, a week. Some of that is editing podcasts, right? Stuff I shouldn't be doing. But that's why you build and scale in such a way where you have professionals working for you.
Hmm.
And you also have other partners too that are aligned, that have skin in the game too, and have skin in the outcome also.
Yeah.
We're all pulling in the same direction. And I think that's where the mom and pop investors go wrong. They don't trust anybody. They do everything themselves, and they violate that other rule that I mentioned. They have huge sums of money into just one deal. It's a huge risk, in my opinion.
Yeah. So you want to spread that around and actually get other people. I would imagine those 60 hours of work you put into managing your portfolio, not a single one of them goes into fixing toilets.
No, no. Honestly, I don't know how to do an eviction. I understand how long it kind of takes, but it's different in every state, right? Like that's the property manager's job. Like
Yeah.
I don't know.
But it happens in your business. You just, that's not a thing I know how to do.
Yeah, that's why apartments are a little easier because now the property managers are a lot more sophisticated than your residential property
Hmm.
managers. Instead of talking about, you don't talk about individual evictions. We talk about it at our calls where we're talking about, all right, what is our total occupancy? We're just talking
Hmm.
percentages at that point.
Yeah. It's really interesting.
So it's unfair,
Um,
right? Like, until you get to that scale, it's hard to get to that scale. But once it is, it's so easy.
yeah. So do you think from this point it's going to be fairly simple to go from, almost 3,000 units to like 4 or 5 or 6,000 units in your portfolio?
Um, yeah, probably. But I mean, now I'm kind of starting to think about, all right, what's my end game here, right? As I tell a lot of my investors, like, you got to come up with a simple passive cash flow number in your head, right? And you got to figure out what your kind of lifestyle you want to live and how much money you need every month. And for me, I live a pretty simple life, and I don't really need too much. Um, so, but then again, once you get to a certain scale and you have people you work with that you have a good relationship with, like it just, why would you not do it, right?
It's easy to keep going.
Right, right. So maybe just be a little even more selective, I guess. I don't know. I'm trying to figure that out myself.
Like what the next steps are. Do you grow your portfolio of real estate, or do maybe you start buying other cash flowing businesses and start doing
Well, I
legacy
don't
type
know.
stuff?
I don't know if I'm gonna do businesses because businesses are even more riskier and higher return, of course. But like, that's why real estate's so nice because it's more of an end game strategy.
Hmm.
And I think that's why I'm going to mobile home parks because it's a little bit more cash flow asset. And I'm starting to learn about like life settlements these days, which is an even more lower risk. I mean, it's totally uncorrelated with any economic ups and downs. And this is investing in people's life insurance. You basically buy it from them as an investor, and yeah, when they die, you get paid. So the premise is, nothing is more guaranteed than death and taxes, right? So why not be on the investor side of that? Really morbid, but hey, I
That's
mean,
an interesting. I was not even aware that was an investing class that you could buy insurance policies.
and
I assume. Do you
and
pay
that's
out the death benefit?
right. And that's the beauty of it, right? Like you want to be a contrarian investor. Everybody talks about flipping houses and tax liens. Very few people talk about apartment investing or mobile home park investing, but nobody's talking about life settlements. Goodness gracious.
Yeah, I've never even heard of that, and I got a lot of investor buddies. So that's crazy. You'll have to look more into that a little bit, see what it's about. I assume that's. Do you have to be an accredited investor before you can start investing in things like that?
Yeah, yeah. And
So you have to
that's what's
you have to
that's what's kind
officially
of
be approved by the.
well, I mean, being accredited is sort of like being pregnant, right? You either are, or you aren't. There's no one's going to give you a certificate saying you're accredited. But that's, to me, that's what kind of drives me crazy. Like there's all these like laws that accredited investors supposedly have more access to these type of private equities. And I wasn't accredited not too long ago. I didn't start off with anything, and I had to kind of build this slowly. And it's really sad to say that like a lot of these better deals, just regular people don't have access to them, and they're the ones that need it the most, right? But if you're a non-accredited investor, you just have to look around. 90 to 97% of deals out there are Regulation 506B, or they accept non-accredited investors. You just don't have access to them because you don't have the network to get into them.
That makes sense. So it's like it's building the relationships that gives you access to the deals.
Right. Most people who are real estate investors, mom and pa's, they're diving into talking to brokers and looking for deals. But when your net worth gets to be above $500,000, certainly accredited, the old saying, your net worth is your net worth, is so much more true.
Yeah, and it's the people that that really help you get where you're going.
Right.
So let's bring it home for our listeners a little bit and talk about guiding principles, right? So something that you do on a daily basis, regularly, that sort of contributes to your success and your influence, and maybe something that you wish you knew when you first started out on your investing career.
I think say like begin with the end in mind, right? And then try and figure out where what your pedigree is. When I talk to newer investors, it's always like I try and figure out where they are in the three resources: time, money, and knowledge. Granted, they're not going to know too much, but in terms of how much time do they have? Do they work like an 80-hour-a-week job? Do they have 8 kids? And then how much money do they have? Like what I do and what I help a lot of people, get single family homes, it's investing, right? You need money to invest. If you don't have money, I can't help you. You got a money problem. You need to fix that. And yeah, I can't help you, right? Like I don't do these creative deals where no money down. You need money to do what I do. So like, yeah, guiding principles, let's say, also like begin with end in mind, because the most people I talk to are like higher net worth, high paid professionals, yet they want to flip houses, and it's like they got their priorities all messed up. They say they want to be passive, but they're not doing that.
So it's like, if you're a high net worth individual and you've got money to put into investing, flipping and wholesaling is a very active type of thing. You're buying things and selling contracts, and doing a lot of work for that. You're not actually creating a passive income there. So you're actually saying, hey, that's if your goal is actually to create passive income and you're a high net worth individual, there's probably a different path you should be taking.
Right. Yeah. I mean, come on the more simple passive cash flow train. But if you're not, hey man, I'm cool. Keep paying my taxes for me. Good job.
Yeah. And like I've talked to a lot of newbie investors that getting into wholesaling is a great way to create that cash, right? To create the money so they can get in and do some of the other deals that you're talking about, where you have to have money to get in and get started. Where if you're going to wholesale a deal or two, you can create $10, $20, $30,000 that you can use to put into a more passive style property.
Right. I mean, I've never wholesaled a property. I mean, I just go to work at my day job and save money. And yeah, I ate ramen noodles a lot for the first few years. But, I mean, a lot of my guys, like, I'm like, why would you want to wholesale a property and make 10 grand when you can just work an extra shift on Sunday, do an extra surgery, and you make 10 right there? Right.
Yeah.
Like again,
Yeah. So I mean, that's
what your highest and best use is.
So you're talking to a specific subset of the market that has the high paying jobs that they can use to create the income they need, create the cash.
Right. And a lot of times, like, my heart kind of goes out to these guys because they're the ones that busted their butt from kindergarten all the way through college, and then more years of college, and then more professional licenses. I mean, not saying that, this subset is more deserving or not, but I remember when I was in college, I wasn't frolicking playing frisbee in the quad. I was in the basement doing my homework.
Absolutely. And that's the way it goes down. You put a lot of work in. But yeah, I really like that you're like, you know who your people are and who you're trying to help. And really hope you can grow your smart passive cash flow brand and really help more of those people, because the real estate, what is it? They say more millionaires are created in real estate than any other asset class. So at this point, I just want to thank you for coming on, being on the show. Where can people find you if they want to learn more? If they're, they're a high network individual or highly paid professional, and they want to learn about the investing stuff, where can they find you? What can they, and what kind of people are you looking for?
Yeah, I would say, if you're kind of looking to get started, I would check out my first 20 podcasts, which are all about buying remote turnkey rentals.
Hmm.
And then, yeah, I mean, check out the website Simple Passive Cash Flow, and then that's the podcast, and then the website simplepassivecashflow.com. And yeah, thanks for having me, Richard.
Yeah, it's great to have you on the show and talk a little bit about investing. I haven't had any other investors on the show before, so it's kind of cool to get and talk about some of that. It's one of my favorite subjects. So yeah, thanks for coming on the show. And if you are one of those people who has a highly paid profession and want to get into real estate, I would check out simplepassivecashflow.com and start looking into some of the real estate stuff. I know it's a great way to put your money somewhere that'll actually work for you a little bit harder than working for it for yourself. So thank you, Lane, for coming on the show. Really appreciate it. Look forward to speaking to you more soon.
Yeah,